The pound is falling against its major peers after weaker than expected labour market data boosted expectations that the Bank of England will cut interest rates next month. The unemployment rate climbed to a four-year high of 5%, up from 4.8% in the previous reading, and exceeding expectations of 4.9%. Meanwhile, the employment level fell for the first time since 2024. The number of employees on payroll fell 32,000, following a downward revised 32,000 in September. Now, as far as pay growth is concerned, there are signs that is easing. Pay growth slowed to 4.6%, the weakest level since February to April 2022, while total pay growth, including bonuses, fell from 5% to 4.8%. That was slightly below the 4.9% forecast. Interestingly, this data highlights the weakness in UK jobs markets following the Chancellor's budget, which increased the tax burden on employers from April, where we saw the employer national insurance contribution rise at the same time as an increase in the minimum wage, making it more expensive for businesses to employ staff. Now, following the data, the market has lifted Bank of England rate cut expectations for December to 80%. That was up from 68% on Monday. I mean, this report basically provides further evidence that the UK jobs market is weakening. Bank of England Governor Andrew Bailey voted to keep interest rates unchanged this month in a very tight 5-4 vote, and he had the deciding vote there. But he also signaled that he could be persuaded to cut rates next month if data confirmed the disinflationary pressures were continuing. And I think, this data does point to that happening. Now, attention will turn to GDP figures, which we have on Thursday, which are expected to show growth of just 0.2% in the third quarter, down from 0.3% in Q2. And then obviously we've got all eyes then on the budget on the 26th of November, which Rachel Reeves is expected to raise taxes on households to fill a funding gap. Now, increased taxes are likely to slow growth, could slow the labour market further and weaken inflation, potentially paving the way for more rate cuts from the Bank of England next year. As a result, we're seeing the pound trade at multi-month lows versus the US dollar and trading at multi-year lows versus the euro.